This is Bill Young with Adapted Perspective. Today we're going to look at how using closed-end funds can help your performance in the stock market, and also how using our master closed-end fund spreadsheet can improve your stock market performance. So just so you understand, I'm a real guy. This is my house. It's not a fancy studio. That's our cool built-in bookshelf behind me. You may or may not see two cats running through screen, or hear them scratching or meowing in the background. Currently, they are interested in whatever's outside the window. So hopefully they won't be interrupting us. So in making this video, you need to understand I'm not a financial advisor. I'm not a wealth advisor. I am an average guy who happens to be at home today. So I created our stock market spreadsheet, or our master closed-end fund spreadsheet, during the pandemic when we were stuck at home. I utilized the time well. I dug into the stock market on how to invest on our own, and initially started investing in some single entity stocks. And once I discovered closed-end funds and saw the potential and saw the benefits of owning closed-end funds, we transferred everything to closed-end funds. And the more I read online, the more advice I got. I love the advice I got, but it was groups picking specific funds, and I wanted to see the whole list. So there's a place you can go online that give you access to all 450 some odd funds. However, they don't compile the list. It's not like you can vote it. You click on every individual link, it takes you to the company's page, you see their portfolio, or at least part of it, and you see the benefits of having the company, the price to get in, if it operates at a discount or premium, what their dividend payment is, how often that occurs, and then a top 10 company, or the top 10 list of companies they own. That's good, but I wanted everything. I wanted to see everything and not just rely on someone else's advice. So during our forced lockdown, I took the opportunity of being at home and spent a ton of time building this list of 450 different companies and going through the list and seeing which companies interested me, setting some parameters and boundaries on investments. So I'll show you the list a little bit, but that's not the point of today. The point of today is to show you the difference between closed-end funds and single entities, and also how using our system can help you. So our closed-end fund spreadsheet is built, yes, based on the whole funds, or based on the whole list, but it's highlighted and earmarked. It's grouped by what we own, it's grouped by funds that we're interested in, and it's grouped by funds that other people have recommended, funds that I'm not interested in at all, and some funds that just sit on there. I update it every month, so it's a complete system-wide update every month. And then I update what I'm interested in, what we own, and what other people recommend weekly. And at some point, we will offer that for a membership access on our blog. But that's not the point of today. The point of today is to educate you. I took a ton of time educating me. I want to help out and help you see that you can get into the market a lot cheaper than a single entity stock. And you can get a lot more benefit out of a closed-end fund. So look at that. So I'll share my screen with you, and we'll move this bar out of the way. And let's look at this. So stock market terminology. I'll put this link along with the video. I wrote a post a while back about just different terminology in the stock market. This specifically looks at closed-end funds, or this specific definition defines closed-end funds. You can pause the video and read it. I'm not going to stay on here, and I'm not going to read it to you. Closed-end funds look like mutual funds and ETFs, but they pay a much higher dividend. And for you and me, that's really good. So getting into closed-end funds, I made this spreadsheet maybe months ago for a friend of mine, and it compares Dividend Aristocrats, Dividend Champion, and a Dividend King, single stock with one closed-end fund. So since the information is old, I want to live update it here. So that way we can get current market average and you can see how much benefit a closed-end fund is compared to company. You can also see where I go to get the information. I don't pay for any of this access. These are all public access. It's not open access like a blockchain, but it's still public access. So let's start with American Tower Company or American Tower Corporation. So go to the online investor. You can see my search history. The online investor is a free website. You might get limited to 6 different quotes. He'll ask you if you want to join the newsletter to get more. You join the newsletter, you get weekly advice, and then you get to keep looking for quotes. So American Tower is AT. We type in gives you a ton of info. It'll tell you the dividend history. But what we want is just a click graph. So let's base it on how it opens. Okay. Net asset value and discount to net asset value apply to only closed-end funds. Dividend a share, as far as I know, changed a little bit, went up 1 penny. Okay, so the annual dividend, since it's it pays quarterly, so that means it pays for the year. So the annual dividend based on 1 share is 140 times 4. That gives you 560, just like formula up at the top says. Okay, and then the percentage yield of that, that's not calculate well. And the annual yield of the dividend is 2.41. So if we look at NRO, closed-end funds, those are best found through CEF Connect down. So long as their website is green, you type in NRO. Right, and here's their current information. So their current share price as of yesterday is 446. Their net asset value is 444. Currently selling for a premium, almost break even, but still a premium. Just means it's a little bit more. The dividend amount a share is still the same, and it pays monthly. So that gives you dividend amount per share times 12, so it pays monthly. But that's your overall return on investment. The other benefit to owning NRO compared to American Tower is NRO owns American Tower. You can go to their portfolio. Crown Castle is a cell phone business. Okay, and then if you want to dig into more of what they own, you can go to White Charts. White Charts is a paid for service, but you can still get access to what we need to. So you type in NRO Holdings, White Charts. It'll list out the top 25 holdings for the company. Let's see. There it is, American Tower Corp. So if you want the full list of what NRO owns, you would search NRO Holdings and look for their specific portfolio on Google. And it's there. It really does just take a little bit of digging. All right, so now let's go back let's look at realty income. When we started out, we bought realty income, and it was about $60 a share. So we go back to AMT, or go back to Online Investor. Search for realty income. Tells you price down. Click on the chart. Like we said, we were basing it when it opened. Dividend a share. It's 247. That pretty much is what that is. So annual dividend pays monthly, right? So it's 0.2465 times 12 gives you 2.96, and that gives you an annual dividend of 4.33%, or an annual return of 4.3%. So if you look at IGR instead as a closed-end fund, let's see, current share price as of yesterday is 98. The current net asset value is 829. Selling at a discount, which just means that you're not paying full price when you buy a closed-end fund. Dividend has stayed the same, still 0.05. It pays monthly. All right, and it gives a yield of 7.52. If you wanted to know more, so IGR is a real estate investment trust. They own Simon Property. That's a mall company. Crown Castle is cell towers. They're American Tower Corp again, right? Storage companies. So realty can be home ownership. It can also be anybody who pays rent. So a mall pays rent. Most cell phone towers lease their properties to Verizon and Xfinity and Sprint and everybody else. Very few cell phone companies actually own their own towers. They're too expensive to build. So cell phone companies or cell phone tower companies build the towers and then lease the space. If you wanted to know more about IGR, we could attempt to put IGR at the top. And it'll give you the rest of, or the top 25 of what they hold. And that's the same. If you wanted more information, you could look at IGR holdings on Google and try to find their entire portfolio. And then our last and Dividend King, AbbVie is very well known. They pay a quarterly dividend. Let's see, cost of a share at the moment. Dividend history, right? Click on graph. See, enter your name, enter your email address. I already have an account. So if you don't want to put in your email address here, we can come over to Y charts and do the same thing here. A current price of AbbVie, $154.14. Yep, only applies to closed-end funds. We look at their overall dividend, how much it gives you a year, and find our annual yield is at 3.66. The closed-end fund alternate is EOD. And I'm sure there's another one. EOD is one of my favorites. So currently, net asset value, 529. Selling at a decent, actually a really good discount net asset value at the moment. Their dividend has not changed. It pays quarterly. So, yep, that doesn't look like much. 50 cents compared to $5 doesn't look like much. But the yield on the dividend you're getting is over 11 cents. That's huge. And the difference is how much you can buy it. So if you buy AbbVie, it's 154 a share. If you buy EOD, that's 484 a share. So to compare, let's adjust the price tag. So if you're going to invest 154 into AbbVie, divide that by yesterday's cost a share of EOD, you get 31 shares, whole shares. So if we look at 31 whole shares times, there we go, our dividend a share, that's what you get per month for the same investment as what you would get on one share of AbbVie. And so AbbVie, you pay that one per share, right? It would give you that for that one share you own, and it would generate a little over $5.50 a year. The same money invested into EOD pays you that per month, and for the year is almost $50. So closed-end funds will get you into the market cheaper than buying a single stock. It will also throw you a bigger dividend on average. Current average of dividends across the 450 some odd closed-end funds is 7%. That means you have some lower, some higher. And when you make your own portfolio, you get to pick how much dividend percentage you're going for. So when I started building a portfolio, my goal is to have a portfolio that had a value or a dividend value greater than 8%. Currently, it's 8.67. Okay, my next goal is to raise our dividend percent, our annual dividend, to 9% or better for our monthly dividend payers. So why all of this matters, or at least how all of this relates to our closed-end fund system. You can keep cherry picking funds. You can read and get other people's advice. I read a lot. I listen to podcasts a lot. I earmark everything I hear. I highlight specific companies. If the Online Investor or the Contrarian Outlook or anybody else I read says, hey, pay attention to this company, it ends up on a list. And I keep track of those. I update it as needed. I'll take things off of it as needed. And then as I buy and look at and sift through closed-end funds, I'm looking for those companies that I hear about. EOD holds AbbVie. Let's see if it makes their top 10. It makes their top 3. EOD owns Microsoft, Apple, AbbVie, Visa, ConocoPhillips, oil and gas. United Health Group is a huge dividend payer at the moment for a single company. Alphabet, CVS, Oryx, I don't know who that is. Healthcare. So instead of you investing a ton of money into Google, one share, you can invest in EOD, and that single investment in EOD allows you to invest in all of these other companies. So if one of these companies tanks, there's still a lot of good companies. They have 407 as of March, they had 407 different companies they're invested in. So if in the downturn economy, if Microsoft or Apple or AbbVie drops, ConocoPhillips, United Health, CVS, other healthcare groups will bring it up. So as you ride through the storms of the market, closed-end funds give you a much more stable base. And how that relates to our dividend system. I mean, yeah, I earmark everything. So I have targets that I'm after. I generally sort things based on their overall discount. Blue is what we own, purple is recommended. Green, if it shows at this angle, is what I'm interested in. And all of that plays into the next decision. So I look at flags, different companies to look out for. I have our stock history, this out of the way. I have where we started. I have where we are. I have our dividend projections for the year. And every time I update the system, this gets updated too. So of where we are right now, we come to the bottom. So we have this much invested. We're projected to get about $545 annual dividend. That gives us that 8.67 yield. We've made about 3 in dividends. All of that's been reinvested back into other purchases. Our overall return on investment so far is 4.83. So when the market is down 7% and we're up almost 5% on dividends alone, that matters. Versus single stock, low paying dividends, you don't have the same return. So eventually we plan to offer this access or access to this spreadsheet and format and make it transparent. We'll be honest with what we own. We'll be honest with what we buy and sell. And you'll have access to all the research and all the filtering I do. I mean, at the end of the day, I mean, we want to make money, but at the end of the day, my goal is to help you, because this is far easier than what it looks like. Everybody, you watch commercials online, talk to your average broker, everybody says the stock market is challenging. It's an enigma. It's bigger that you can understand. But in reality, it's not. I'll be honest, there's things that I don't get. There are things that I still don't understand. But in looking at closed-end funds, comparing that to single entity, American Tower Corp, they will get paid. Their towers will get paid. It looks like a good investment. But for the average guy, I don't have $230 I can throw at a company and just get one share out of that. Okay. And they pay quarterly. They don't even pay you every month. If I can own something for a lot cheaper, who also invest in the same company, and who throws me a pretty good dividend, that is a much greater value. So if we look at AMT, so it's 232.7 divided by 1 current share cost Nro. You can buy 52 shares of that. 52 times NRO's dividend. So I'll put it this way, if you have $232.57 that you want to throw at AMT for 1 share and get $5.60 total benefit off your dividend for the year, the same amount invested into NRO, really a little bit less because we're buying whole shares and not partial shares. So if you get 52 whole shares into NRO at their dividend, 0.0312, it's $1 a month, right? And then you multiply that by 12, you get 20 bucks for a year. $20 compared to $5 investment is huge. It throws a much greater dividend, and it doesn't look like a lot, but it's giving you a better access to the market for a much cheaper cost that throws a much better dividend, and that'll keep paying you long term. Like, it decreases your risk. If AMT for whatever reason goes down, NRO holds a lot more than just AMT. Okay? Their portfolio weathers the storms a lot better, and that decreases your risk, and that decreases my risk. So if you want more information on closed-end funds, then peruse the website. The link to the stock market info will be with this video. Check out that financial strategy tab and read more on closed-end funds. We'll continue to put more information out on closed-end funds and work our way toward where we offer that closed-end fund master spreadsheet as a membership access. Price, all of that, not important right now, not even set at the moment. Biggest thing is educating you on closed-end funds and how you can get into the market and get into the market a lot cheaper than what everybody else is advertising. So if you want more information, if you have questions, anything, feel free to put it in the comments. And again, I'm not a financial advisor. I'm not a wealth advisor. I'm an average guy. My goal is to help you realize you can retire earlier, and also realize you can live a fuller, better, freer life than what society tells you. And that's my cat scratching in the background. So in your investments, excuse me, let me stop my share. All right. My goal in starting Adaptive Perspective was to help people realize you can lead a fuller, freer, better life than what society tells you, and that you can retire a lot earlier than what society tells you. So in starting this website and starting this effort in this business, I want to mark what we're doing and how we're investing. I also want to help you out and help you budget. So Adaptive Perspective overall, yes, we want to help you get to your part of, or your end goal of financial freedom. My goals, our goals, are different than your goals. My map is different than your map. So as you start to look into the stock market, or you're already into the stock market, if you don't have a budget and you don't have a working budget, like a functional working budget that's helping you save money, investing in the stock market isn't going to solve anything. So if you want help budgeting, by all means, please contact me, contact anybody. But let's get that working and get that squared away and look at your overall debt before you really look into investing into the stock market. And if you're already invested in the stock market and you're in debt and don't have a functional budget, we need to look at that, because the stock market isn't going to help you. All the gains you could gain in the stock market, all of those aren't going to help you if you're still paying off debt, or if you're going to leave a ton of debt to your family. So let's fix that and then look at this market. And if you want help with your budget or have no idea how to make a budget, contact me. If you have a ton of debt and just want somebody's advice on how to pay off debt, contact me. If you want advice on the stock market, contact me. Just realize I'm not a financial advisor. You're not giving me money to invest. I'm not taking money from you and investing that money for you. That's not the purpose of this. The purpose of this is to help you realize that you can do this on your own. Here's my advice. Here's my info. You make the decisions that are best for you. I'll tell you what we buy. I'll tell you what I'm looking at. I'll tell you what other people suggest that I buy. Doesn't mean I always take their advice. A lot of people I read suggest companies that are $30 and $40 a share. That's not my budget. That might be your budget. That's not my budget. Okay, I want the best, the most for my budget that I can afford month to month, and that give me a great long-term payout. If you've got the money to invest 30 and be a share, that's great. You can stay at that level. You also buy cheaper. There are closed-end funds that range between $2 right now with a downturned economy, and they pay great dividends, and they've paid great dividends throughout the pandemic and long since, or I'd say long before. It really just all depends on your goals. But starting at the beginning, if you have no budget, or have a dysfunctional budget that doesn't help you, or are in debt, you spending money into the stock market isn't going to help you resolve those issues and then build wealth. It'd be like investing and then you still have all this other stuff to pay off. That doesn't help. So if you need help in those areas, contact me. If you want more information on closed funds, keep reading on the website and check back here updates, because we are going to post more videos on closed-end funds and more comparisons on all the other financial blogs that I see on Pinterest. There are great financial blogs on Pinterest. Everybody's got an opinion. I have an opinion. I made the video, I have a blog. I have an opinion. That doesn't mean it's the best information for everybody. Do I want you to hear my opinion and listen to what I say? Yes. You should be the one that makes your own decisions. Pinterest, there's a ton of information. There's a ton of financial information. There's a ton of people suggesting you buy different stocks. And they give reasons for that. But if you listen to the reasons and how they play out dividends and growth, it's not always the best reasons. Okay? I'll listen to them. But when it comes to me and my decisions, they're encouraging purchases in single stock entities. That doesn't help me. Okay? And chances are that doesn't help you. So if you don't have a ton of money to sink into the stock market or to invest into the stock market, closed-end funds give you a much better option. They get you in cheaper, they pay better dividends, and they have a much better lasting long-term investment. So Daniel Young signing off. I hope you all have a great day wherever you are. See you soon.